Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Monday, March 3rd. In the wake of Friday's material sell-off, the stock market eked out a slight gain on Monday. To be sure, the performance was much better than many participants had feared, and certainly much better than what had been seen in foreign markets. Asian indices led the foreign retreat as they reacted to Friday's action on Wall Street. The Nikkei average in Japan fell 4.5%, while India's Sensex index dropped 5.1%. European bourses fared better on a comparative basis, yet the majority of them still ended Monday's session down more than 1%. Trading activity in the U.S. was choppy on Monday, but ended on a relatively upbeat note, with the major indices bouncing back from larger declines in the final half hour. The resilience was noteworthy as both the financial and technology sectors underperformed the market, with declines of 1.2% and 0.6% respectively. Granted, they participated in the late-day recovery, yet they still ended the day with losses and were the only two sectors to finish with a loss. Concerns about the earnings prospects for the investment banks, along with the specter of additional losses related to subprime and dislocations in the credit market, were the main drags on the financial sector. Thornburg Mortgage was a poster child for many of the concerns as it got clobbered following an announcement that it had not yet met the majority of recent margin calls that totaled approximately $270 million. Losses among influential large-cap technology stocks like Google, Research in Motion, Microsoft, and Apple, meanwhile, acted as the drag on the technology sector. The rest of the market fared reasonably well, underpinned by the outperformance of the remaining sectors. Materials, up 1.6%, led the winning pack as it drafted off yet another big gain in the commodity arena. The CRB index jumped 1%, with most agricultural, precious metal, and oil prices moving higher. Gold closed at another non-inflation adjusted high of $984.20 per ounce, while oil prices hit a new non-inflation adjusted peak of $103.95 before finishing the day up 0.6% at $102.46 per barrel. The increase in oil prices failed to derail the transports, which gained 0.8% and comprised one of the market's best performing areas on Monday. Today's economic data included the ISM index for February and construction spending for January. The latter, driven by a decline in residential construction, fell 1.7% versus the market's expectation for a drop of just 0.7%. The ISM index, a survey of national manufacturing activity, checked in at 48.3 versus the consensus estimate of 48 and the prior month's reading of 50.7. A number below 50 for the ISM index is meant to signal contraction. Yet the market traded up immediately following its release, presumably on a sense of relief the number wasn't any worse given the weak readings seen in a number of regional manufacturing reports. The ISM boost did not last long, though, as the persistent weakness in the financial stocks took its toll. At their lows for the day, the Dow, Nasdaq, and S&P were down 105, 31, and 10 points, respectively. I'm Pat O'Hare for Briefing.com. Thanks for listening, and have a good evening.